And today we're diving into a story that, well, it seemed to happen incredibly fast. A major industrial acquisition, one that looks set to really reshape an entire sector.
It really did. The speed was quite remarkable. I think it reflects a very, very clear strategic drive behind it.
Okay, so let's unpack this then. Our mission today, a deep dive into Tata Motors' proposed acquisition of Iveco Group NV, but specifically excluding their defense business. That's important.
Right.
We're going to pull out the key details, look at the strategy behind it, and, figure out what it means for the company, sure, but also for shareholders and the whole commercial vehicle industry.
And our sources for this deep dive, they're pretty direct. We got the formal announcement from Tata Motors Limited.
Yeah.
That came out July 30th, 2025. And then there was a really detailed investor presentation. That was the next day, July 31st. Those documents, they pretty much lay out the whole plan for this huge deal.
And when you say rapid, you really mean it. The announcement on the 30th, and then what, less than 24 hours later, a conference call.
Exactly. Very short notice. The call was July 31st, 8 a.m. India Standard Time. You could tell the Tata Motors board had just made a big decision the day before, on the 30th.
Yeah, they wanted to get that news out quickly.
Right. Straight out to the global financial markets. It was immediate.
And who was actually on that call leading it?
It was senior management. Mr. Girish Wah, he's the executive director at Tata Motors Limited, and Mr. P.D. Balaji, the group CFO.
So, the top brass.
Absolutely. And the global interest was clear. I mean, they set up the call to work for different time zones, right? India, Hong Kong, Singapore, London, even New York. Shows it wasn't just a local thing.
Not at all. This had immediate global implications right from the start. Okay, so before we get into the nitty-gritty of the deal itself, maybe we should just quickly establish who the target is here. Who exactly is Iveco Group NV?
Right. Good point. So Iveco Group, they're a pretty well-established Italian multinational company, headquartered in Turin.
Okay.
And they're mainly known for manufacturing commercial vehicles, defense vehicles too, actually, and powertrains. It goes back quite a way. Founded originally in 1975 as Iveco SPA.
And they've certainly been through a few changes over the years, haven't they? Some restructuring.
Oh, absolutely. A real evolution. Back in 2009, it separated from the Fiat Group, became Fiat Industrial. That was about consolidating the commercial vehicle and powertrain side.
Right.
Then 2013, Fiat Industrial merged with C&H Global. That created C&H Industrial.
Okay.
And then the most recent big move was in 2022. Iveco Group spun off from C&H Industrial, became its own independent listed company.
Ah, separating the on-highway transport business.
Exactly, from the off-highway industrial bits. And that recent independence, well, that probably made them a more straightforward acquisition target in some ways.
That makes sense. Quite the journey. Now, you mentioned this acquisition specifically excludes the defense business.
Correct.
So what parts of Iveco Group are relevant here? What's Tata Motors actually buying?
Okay, so we're essentially looking at three main areas. First up is the industrial segment.
Industrials.
Yeah, and that covers, well, the full range of trucks. Everything from light commercial vehicles, think the Daily, and they got new electric ones too, the E-Jolly in a movie.
Okay.
All the way up to heavy commercial vehicles, your S-Way, X-Way, T-Way models. And it also includes buses.
All kinds of buses.
Pretty much everything. Intercity, city buses, minibuses, coaches. And they put a lot of emphasis on multi-energy options there. Gas, electric.
So a really broad portfolio in vehicles.
Definitely. That depth and breadth is, I think, a big part of the attraction. Now, still under industrials, there's also powertrain.
Okay. Engines and things.
Exactly. Engines, drivelines, e-powertrains. And this is significant. Iveco is actually the 5th largest engine manufacturer globally. So that's a huge internal capability they have.
Wow. 5th largest. Okay. And what else? There were 3 parts.
Right. The second part is their captive financial services. It's branded as Iveco Capital.
Ah, the financing arm.
Precisely. And this is pretty crucial for actually selling the vehicles. It supports sales through wholesale financing for dealers and retail financing for customers.
Right. Helps people buy the trucks and buses.
Exactly. And it's substantial. They have a portfolio of around $8.3 billion. So it's not just some small add-on. It's really integral to how they sell.
Okay. Got it. Industrials, trucks, buses, powertrains, and Iveco Capital. What about where they operate? Is it mostly Italy or?
No, they're quite international, though Europe is definitely their stronghold. About 75% of their industrials revenue comes from Europe.
75%. Wow.
Yeah, and they employ around 28,000 people there. But they also have a significant presence in South America that's about 12% of revenue. And then the rest of the world makes up the remaining 12%. They've got, I think, 19 industrial sites globally and 30 R&D sites. So, yeah, a mature, diversified operation.
So Iveco wasn't exactly, floundering or just waiting for someone to buy them. They had their own plans, right?
Absolutely not. They were very much active. Before this deal came along, Iveco Group had laid out its own strategy called Unlimited Pathway.
Unlimited pathways.
And it was pretty ambitious. They were targeting 5% compound annual growth rate, aiming for $17.5 billion in revenue by calendar year 28.
So significant growth planned.
Yeah, and specific targets too, 7 to 7.5% EBIT margin and about 0.75 to 0.8 billion euros in free cash flow. They even had EBIT targets broken down by segment.
Right. So this signals a company with a clear forward strategy. They weren't a distressed asset.
Not at all. It makes them a strategic target, not, a rescue case,
Mm,
which is an important distinction.
definitely. Okay, that gives us a really good picture of Iveco. Now, the big question. How's Tata Motors actually doing this? Let's get into the specifics of the transaction itself.
Right. So the mechanics of it. It's structured as a voluntary tender offer
Okay.
made by a company called Titan Bidco. That's basically a special entity Tata Motors set up for this purpose.
A bidco, standard practice.
Yeah. And the offer is for 100% of Iveco Group NV shares. But again, it's crucial, excluding the defense business. That part's got to be sold off or spun out before this deal settles.
Right, so Tata gets just the commercial vehicle and related bits.
Exactly. Streamlines it for their focus.
And what's the price? What are they paying?
The offer is 14.1 per share,
Okay.
which works out to a total equity value of about 3.8 billion. Again, that's excluding the defense part.
3.8 billion euros.
Okay. And how certain is this deal? Is Iveco on board?
Seems very solid. A merger agreement has been signed. The Iveco Group board is officially recommending and supporting the transaction.
That's key. It is. And importantly, they secured an irrevocable commitment from Exor.
Ah, their major shareholder.
Right. Exor has committed to tender all its shares. That removes a huge chunk of uncertainty, gives the deal a very high degree of certainty.
Okay, that makes sense.
Yeah.
Now, 3.8 billion is obviously a lot of money. How's Tata Motors funding this, and what's the timeline look like? When might this actually close?
Good questions. For the funding, they've secured a $3.8 billion bridge financing facility. Morgan Stanley and MUFG are providing that.
A bridge loan, so temporary.
Yeah, the plan is to syndicate that bridge loan, and then over the next 12 months after the deal closes, replace it with a mix of maybe equity and long-term debt.
Right, refinance it long term.
Exactly. As for closing, the estimate is by April 2026, but that's subject to quite a few regulatory approvals.
Of course. Merger controls?
Yep. Merger control, foreign direct investment reviews, EU foreign subsidies regulations, plus financial regulatory clearances. It's complex.
So, quite a few hurdles to clear.
There are. The timeline they presented showed a sort of indicative 9-month process just for approvals after signing. It highlights the complexity of a big global deal like this.
Okay. Now, this is where I think it gets really interesting. The why, the strategic rationale. Tata Motors talks about this helping them win decisively in commercial vehicles.
Mm-hmm.
So from your perspective, what's the biggest strategic win here for Tata Motors? What does Iveco bring that's like a game changer?
Yeah, it's the core of it, isn't it?
Yeah.
I'd say top of the list has to be access to advanced tech,
Yeah.
particularly digital and autonomous capabilities.
Okay, like ADAS rates.
Exactly. Advanced driver assistance systems, their whole software-defined vehicle, SDV architecture, advanced telematics. This stuff isn't just nice to have anymore.
No, it's becoming essential.
Right. And this potentially accelerates Tata Motors' own roadmap by years. Developing this organically is incredibly expensive and time-consuming.
So buying expertise in technology.
Pretty much. It also significantly deepens their EV expertise, gives them more platforms, and strengthens their ability to meet future emissions rules with advanced powertrains. It's about future-proofing.
Makes sense. So it's not just about bolting on more trucks, it's about the tech inside them. What about scale? How does this change their position globally?
Oh, it's a massive shift in scale. Huge. Look at trucks over 6 tons specifically. Tata Motors Group, they were already at 4th largest globally,
Right, pretty big already.
and Iveco Group was 15th. Combine them. Their combined sales volumes instantly make them the 3rd largest global truck manufacturer.
Wow. From 4th and 15th to 3rd.
Yeah, that's a huge jump. Puts them right in the top tier. We're talking combined aggregate volumes of 545,000 vehicles total, aggregate revenue north of 200 billion, $207 billion, I think. EBITDA around $25 billion.
That kind of scale must give them enormous clout.
Absolutely unparalleled leverage in supply chains,
Yeah.
much bigger R&D budgets possible, a competitive moat against smaller players. It gives them a platform to really invest for the long haul and global leadership.
That's incredibly powerful. And looking at the two companies, it seems like their strengths really complement each other geographically and in terms of products.
They really do. It's quite a neat fit, actually.
Yeah.
Tata Motors, market leader in India, strong in Africa, SAARC, Middle East, expertise in cost-sensitive markets, full range of CVs.
Right, the emerging market strength.
Exactly. And Iveco,
Yeah.
strategic presence in Europe, Latin America,
Mhm.
very comprehensive CV portfolio, but particularly strong maybe in LCVs and buses. And they've done a lot of innovation in alternative fuels, natural gas, hydrogen, plus that diverse manufacturing base.
So Tata's emerging market muscle meets Iveco's regulated market tech and alt fuel focus.
You've got it. It's genuinely complementary. Very little direct overlap, which is also important.
And when you bring those complementary bits together, what about synergies? Are they expecting cost savings or revenue boosts?
Yes, they are. They're anticipating annual free cash flow synergies of up to 0.5% of the combined revenue,
Okay, 0.5%. Starting when?
starting from fiscal year 2028 onwards. And they've broken down where they expect these to come from.
Right, not just vague promises.
No, they're talking revenue synergies, cross-selling products, using combined networks, CapEx synergies, so optimizing R&D spending, especially in those big areas like EVs, alternative fuels, ADS. Don't need two teams doing the same thing.
Makes sense.
And, of course, cost synergies, strategic procurement, getting better deals due to scale, more efficient sourcing for new markets. So it's about combining, yes, but also optimizing.
And finally, on the strategy side, how does this make the combined company more resilient? Does it diversify things?
Massively. It's a textbook example of diversification, really. Geographically, as we said, Tata's emerging market focus perfectly complements Iveco's roots in regulated markets like Europe and LATAM.
Right, less exposure to any single region's ups and downs.
Exactly. And then segment-wise, too. Tata Motors' focus is often on value-driven, rugged CVs for mass markets. Iveco brings that premium modular lineup, often tailored for regulated markets needing advanced tech.
Different strengths for different needs.
Precisely. That kind of diversification smooths out the bumps, reduces the impact of market cycles, creates a much more stable, balanced global business.
Okay, that's a really compelling strategic picture. So let's pivot to what this all means for the people involved, the stakeholders. Starting with Tata Motors shareholders, what's the value proposition for them?
Well, for them, it's presented as a clear strategic move. Meaningful growth, but actually pitched as lower risk because they're buying established capabilities rather than building everything from scratch.
Access to that tech we talked about.
Right. Access to new tech creates a more resilient company overall, one that should generate more cash. And they've stressed the financial prudence.
How so?
They expect the deal to be EPS accretive, meaning boosting earnings per share within 2 years.
Okay, pretty quick.
Yeah. And they plan to repay the acquisition debt within 4 years. All while, importantly, aiming for both companies to remain free cash flow positive throughout. So it looks like a financially well-structured deal from their side.
Okay. And flipping it around, what about Iveco Group shareholders? What's in it for them?
Well, for them, it's pretty straightforward. It's an all-cash offer, providing an exit at what are described as excellent premiums.
So, a good price.
Seems so. And combined with that high degree of transaction certainty, we mentioned the board support, Exer's commitment, the financing being in place, it offers a very clear, attractive way out.
Gotcha. Now, the big one often in these deals,
Yeah.
what about the Iveco Group employees and, other stakeholders, customers, suppliers? Is this going to mean massive disruption, layoffs, plant closures?
This is actually a really crucial point in their communication. The sources state very clearly, minimal disruption expected.
Minimal disruption, really.
That's the message. No planned changes to Iveco's existing unlimited pathways strategy. No expected impact on production sites. No impact on existing customer contracts. And importantly, no expected impact on employment levels.
Wow. How can that be with such a big merger?
Well, it comes back to that complementarity we discussed. Because there's so little overlap in their portfolios and their main geographic footprints.
They aren't really competing head-to-head in most places.
Exactly. So the rationale isn't about cutting costs by eliminating duplicated roles or sites. It's about adding capabilities and markets. That's fundamental to why they're saying minimal disruption.
That's incredibly significant for the people working there. It suggests the existing business keeps running.
That seems to be the plan. They even say the deal supports Iveco's existing investment plans across all those different powertrain technologies: diesel, gas, biofuels, EVs, hydrogen. It's not about shutting things down.
Okay. And what about the Iveco brand and identity?
Also preserved. They state Iveco's corporate identity and key brands will be kept. And the Iveco board will continue to drive the decisions for Iveco's own long-term growth.
So it sounds like Iveco continues, but within the larger Tata Motors family.
That's the idea. Joining a globally respected group, Tata, known for its values, and frankly, a pretty good track record with big global M&A look at JLR, Jaguar Land Rover.
Right, and they manage that integration well over time.
Exactly. So the idea is Iveco benefits from being part of that larger group, leveraging Tata's complementary distribution, maybe their cost-effective supply chain to enhance its own offerings and potentially enter new markets.
Okay. So, stepping back, this is clearly a massive deal. It looks set to properly redraw the map in the global commercial vehicle world. The scale, the tech, the complementary nature, it really points to a new powerhouse emerging.
It absolutely does. A truly formidable combination. It has the potential to really shape the future of commercial transport globally.
Which raises a final important question, maybe something for you, our listener, to think about. Given this massive combined scale, and especially their focus on a multi-energy approach, not just electric, but gas, hydrogen, everything, how might this new global giant actually redefine what's possible in commercial vehicles? Think beyond just the trucks themselves. What about the broader implications for logistics, maybe infrastructure, sustainability? What happens when these two huge players with different strengths really start integrating? What could that mean for the future of moving goods and people across all kinds of different global markets, from the most advanced to the most cost sensitive? Something to ponder.